Hi guys, I hope everyone is having a nice evening. It is the late hours of November 11th, 2015. This will be posted very early in the morning on the 12th. And this is Christopher Aaron coming to you again. I just wanted to wish everyone out there a happy Veterans Day for any of the veterans out there. I hope it was a good day for you. I myself was never enlisted in the military, but I spent the first part of my career working very closely with them. And I did spend some time overseas, and I got to see with my own eyes some of the current events that were happening around the world, especially in Iraq and Afghanistan. And it is part of the training that I attempt to bring to this sort of analysis, just from the standpoint of analyzing trends. And that's what I believe is one of my specialties. So again, happy Veterans Day, and let's get right into the price action. This presentation will be fairly short. Just going to update you on the recent action for the last few days, starting with gold. So the action has been very choppy. We have not really seen a significant move down since the last video in gold. As you can see, these prices here on the y-axis are only $2 apart for every line. So this is barely any movement at all here, even though we've closed down a few dollars lower today on the 11th. Not much movement there. Why? Because we are right at the August lows, the July and the August lows. And the market is pausing before it decides what it wants to do. So we'll be looking either for a retest or a break below these July and August lows, which will lead to a new leg of the bear market, a new leg of lower prices, one which I believe will be most likely the final leg lower of this bear market. That's the 6-month view of gold, using the GLD fund, of course, which I do not recommend you own for the long run. I use it for charting purposes. And there's the key that I'll have up for the next several slides. All these colors staying the same on this next slide. So we've backed out to 1 year. And I just want to bring some things to your attention here. The green circle is showing the current price action here above the July and August lows. Still being in this channel, this primary downtrend channel shown in blue. Now we had the break above this short-term downtrend line, and it turned out to be a real head fake here. If you can see this, we hit this line 1, 2, 3, 4, 5, 6 times, and we broke above it. It kind of gave everyone a fake before breaking back down. And we are looking here at this retest of the July lows for gold. Now, if we break through the lows, where does that leave us? We have this head and shoulders target shown right here. The left shoulder, the head, and the right shoulder. This is a pattern that we see often in stocks and commodities, where the price action will form what looks like a shoulder, a head, and another shoulder right here. And typically when you see this form take place, if there is a break below that, you will reach a target which is roughly equivalent to the price action of the head of the pattern, if that makes any sense. And with that pattern in mind, we do have a target of $990 an ounce, which would be about $100 lower from here. So that gives us one possibility to look for over the weeks ahead. I want to turn to look at the gold miners. Do we have any clues as to the action in the price of gold itself? Oftentimes the gold miners will lead the price of gold and give us a clue a few months ahead of time as to what to expect. Because, of course, the gold miners are leveraged to the price of gold. Their profits are, anyway. And so these companies better know something about the price of gold, or else they go bankrupt, quite frankly. And we do see that happen. Some of them will go bankrupt from time to time. But that said, as a group, this fund, the GDX fund, represents the group of gold miners. And as a group, it will often tend to lead the price of gold in one way or another. So we're looking for clues here. And right now, this is basically not giving us any. This price action here down by the lows, sort of a rounded low being put in here, but nothing that shows me yet that a final low is confirmed. So we don't have any confirmation for the miners. I just wanted to bring that to your attention because it's something that I always pay attention to in the background. And I do like to bring those things to your attention from time to time, because one of these times we will see a valid lead signal from the gold miners, and then we will use that for an appropriate trade or a positioning for the metal itself, depending on how aggressive individuals want to be. Just looking at that 15-year chart, guys, I'm not going to go over it so much this time, but here's where we expect the retest to be. Please see the previous video that I put out from the 8th of November for a lot more detail on this final low retest. And there's a link there also to an article that I wrote on gold-eagle.com that explains this in a lot more detail. Just want to keep this one a little bit shorter, so I'm going to go right into silver. And silver actually weaker than gold for the last few days, closing just under 1440. Now, what's going on here? Why was silver weaker for the last few days than gold? Here we are looking at a chart I bring up from time to time. It is the relative comparison between the U.S. stock market, shown in black, the price of silver, shown in blue, and the price of gold, shown in red. So you can see really clearly here, silver, the weakest of the three for the last 3 days. This is a short-term chart. And you can see gold kind of holding its own. So that showed you the confirmation from the chart a few days ago, where we said gold was approaching those lows and it's going to have some indecision as it does that. And we are watching that right now. But silver, weaker, basically showing us a weakened version of the action in the stock market. So silver is not benefiting right now from the precious metal action in gold, at least for the last 3 days. Now, eventually this will change. I've been mentioning this theme for a few weeks now. Eventually this will change, and we will see silver begin to exert itself for its store of value and its monetary component. And in that case, we won't see it being pulled down with the stock market. We will see silver rising, or at least maintaining its value with gold. Something to watch for in the intermediate term. The 1-year chart here looks different from last time. Why? Because the short-term uptrend line we were looking at since August has broken decisively. You can see that right here. So a lot of weakness here coming into silver after this false breakout that I mentioned in October. And price action just basically, failing to break above this line here when it attempted this primary downtrend line, and then quickly backing off and just sort of ignoring this uptrend line. So that brings silver right back down to the lows here. And we have a similar pattern in silver too as far as a potential target. This is not to say this is 100%. This is a strong potential. If silver breaks through the low here, we have this head and shoulders pattern that brings us $12 an ounce for a target. So this primary downtrend in blue, this is a new chart coming up. And basically what I've done is taken this chart and backed it out. We're looking at a 3-year chart of silver now. And then I've extended it into the future. So obviously this hasn't happened here yet. The end of 2015 and into 2016. But when I talk about the convergence of these trend lines in some of the other charts, I wanted to create this chart to extend it, to show what I'm really talking about here. You can see this line, the high is coming down, and the low is coming down, but not coming down at quite the same steepness as the highs. So these trend lines are converging here. And if you extend the lines out into the future, these lines are going to meet somewhere around the later part of 2016. So I'm expecting that if this low fails here in the retest of the August lows, you might bounce down to this bottom trend line and then bounce up and then bounce down and then bounce up a little bit some more. And when this series of trend lines breaks to the upside, that's when we have a strong indication that the final low is in for silver. And it will give us plenty of time to position accordingly. That doesn't mean that the price is going to go immediately back up. There's often some consolidation that will happen in the weeks and months following a breakout before you will resume the next trend higher. But this is just to give an idea what to expect here and basically to visualize what I've been referring to with this convergence of these trend lines in silver. To sum it up, gold looking at that support, 1075. Let's see what happens in the next few days. And if that breaks, we are looking for those lows between 850 and 1033. Like I mentioned in the last video, silver, that short-term uptrend line has been broken decisively down. So we're looking at that retest happening right now. Could happen on Thursday, could happen on Friday, could happen sometime next week. It's an important test. Because if it fails, we're looking at that low right around $12 as a potential. So I just want to make one last point here. Thank you for watching. And that's really to say, as we're watching these potential breakdowns, I think there's really two groups of people that are tuning into this kind of analysis. One group is people who have been buying precious metals, investing in precious metals for the last number of years and have been holding on throughout these declines. And for those people, you've already experienced the bulk of the decline, is my basic takeaway point. So I don't believe that even if the prices are to fall another 10 or 15%, I don't believe that it will be a good move to try to sell and buy it back. That may happen too quick for you to do that. The other group of buyers are probably the new people that are starting to turn on to this theme of the history and the significance of precious metals, but who are kind of waiting. And boy, this is a really good time to be in that position. You can watch these bottoms unfold. You'll have time to be entering. You could probably start to enter these markets over the course of the next weeks and months and average your way in over time. Maybe monthly purchases, maybe bi-monthly purchases, maybe quarterly purchases, to spread your money out over the course of these bottoms that are unfolding. So I just kind of wanted to address both of those people, both those groups of people. But again, for the people that are that have been holding on and that are underwater right now, I think you've felt the bulk of your pain. And this is kind of a time to keep your head on straight, in my opinion, in my analysis. So watch these bottoms unfold. Know you've suffered the bulk of the percentage. And we will bring to you the analysis as the trend changes. That is going to do it for today. Thank you again so much for joining me, everyone, and I'll see you for the weekend update.